How's it going, everyone? Welcome back to another episode of Crypto Q&A with VirtualBacon. In this week, we have the top 15 questions collected from our TikTok, Discord, Twitter, Instagram over the past week. And I will answer each one of them one by one. This is a recurring series. If you want to ask questions, make sure to go on my socials and follow the Ask Me Anything post where you can ask and submit any questions you have. First, we have questions from Discord. Disco asks, if there is a Cosmos ecosystem rotation, what would be the best ecosystem coins to do well? I think the main play for Cosmos ecosystem this time around is actually Atom coin itself. There are other infrastructure coins within Cosmos like the leading DEX, Osmosis, EVMOS, or staking platforms like Stride. However, I think these are fairly valued in comparison to similar projects in other ecosystems. The main alpha right now is Atom 2.0 and the upgraded token utility for the Cosmos Hub. So if I were to bet on Cosmos ecosystem, I would accumulate Atom and wait for Atom 2.0's effects to kick in. The only way for the other ecosystem coins to go up is for Atom itself to pump first. And considering Atom has never received the hype and it's only sitting at a $3 billion market cap, I think the upside for Atom itself is just as large as the other ecosystem coins. If Atom were really gunning for a top 10 or top 5 coin, that's a 5 to 10x upside. Other Atom ecosystem coins will not outperform those multiples. Jacoby asks, what happened to Pulsechain? I still believe Pulsechain will do well. It was never a bet on its technology, but rather purely on the marketing ability of Richard Hart and the Hex community. And they're doing just that. I still see Pulse mentioned everywhere on Twitter, YouTube, TikTok, etc. The long delay is painful, but I think it's the right thing to do. It's best to launch when the market is good, as Pulse's success is entirely dependent on the price doing good for marketing. Richard Hart has done a really good job timing the market. If Pulse launched anytime within the past year, it would have been really bad because everything was going down. He's trying his best to time the market bottom, and so far it has worked. So I am staying patient. Whenever Pulse does launch, I think that may even be a market bottom signal as predicted by Richard Hart. Virtual DeLorean asks, do tokens usually dump when they hit exchanges as early investors take profit? This isn't always the case. It depends on the project's tokenomics. Typically, all legit projects have a vesting schedule for early investors. They are usually locked for 6 months to 1 year before getting any tokens. Let's study some tokenomics. Here's a bad example of Dogechain. As you can see, the team has large chunks of tokens unlocked at listing. They have allocations for team members, foundation, treasury, marketing, and advisors. All of these start to unlock at listing. And don't be fooled, they are all controlled by the team. It's just under different names. So the team, early investors, and influencers definitely got a dump at listing. Here's another example, Stargate. Here, the investors and team have a 1-year lockup, meaning they don't get any tokens until a year after the listing. However, there were 2 public auction pools accounting for 26% of the total supply. These were public retail buyers who got in at between 20 to 75 cents, and these were fully unlocked at listing. So although the VCs didn't get to dump at listing, there were large amounts of retail investors dumping each other when the markets opened. This is just as bad for anyone that didn't get into the public sale. The rule of thumb is the earlier and cheaper you get in at, the longer you should be locked up. If VCs or the team have large chunks of tokens unlocked at listing, that's a huge red flag. If there are large public sales before listing, you also need to get into those sales, or you can get dumped on by the retail buyers. You want a good balance between both types of investors, and ideally you want to get in at similar prices to these early investors. That's the best way to avoid getting dumped on. Next up, we have questions from TikTok. Voidy asks, have you staked your Ethereum? I don't stake Ethereum because I can get much better yields using Lido. Just buy Lido's STETH token and you will automatically receive staking rewards. By just holding STETH in your wallet, you will get a little bit more STETH every day based on that day's Ethereum staking reward. This gets me the same 4% APR. On top of that, because STETH is a freely tradable token, I can take my money out anytime by just selling it. I can also provide liquidity on Curve and pair STETH with ETH to get another 7% APR. This is really good because there's no impermanent loss here as ETH and STETH price stay the same. This is the power of liquid staking. I'm sure there are better yields out there on top of STETH if you dig deeper. TikTok6969 asks, what hardware wallet do you recommend? I recommend either Ledger or Trezor. I have used Ledger since 2017 and Trezor since 2020. Both get a job done and are highly reliable. Get the Ledger Nano X or the Trezor Model T. These are the higher end versions, but they are totally worth it for the higher amounts of storage. On my Nano X, I have Bitcoin, Ethereum, Cardano, Solana, Cosmos, and I still have room for many more coins. Also, make sure to buy from the official website, as resellers can tamper with the wallet and steal your coins. Use my affiliate link in the bio if you want to support the channel. Shadow ABD asks, is trading 100% guaranteed? No, trading is never a guarantee. It's always just educated guessing. Whether you trade based on charts and TA or with news and analysis, there's always a chance for your trade to go wrong. You need to have a clear setup with a take profit level if your trade goes right and an invalidation level that tells you that your trade was wrong. This way you can estimate what your potential profit and potential losses are. As long as your potential profit are much larger than your potential loss, even if you are wrong half the time, you still end up making money. You just need to win more money than you lose over a long period of time. Nano Price asks, is proof of stake going to make Ethereum less decentralized? In theory, no. Staking has much lower requirement than mining. You don't need any technical knowledge or hardware setup. However, staking pools are still the most popular way to stake Ethereum, and currently the biggest staking pool, Lido, controls 29% of Ethereum validators. Coinbase, Kraken, and Binance exchanges also control 6 to 13% of Ethereum validators. So yes, Ethereum is somewhat centralized right now among these staking providers. This issue can be solved though, as staking doesn't have the same monopoly problem as mining. In mining, the most dominant players also get the cheapest operating costs because they have cheaper electricity and cheaper equipment. In staking, this isn't the case. Whether your pool has 100 ETH or 1 million ETH, the operating costs stay the same. That's why I don't think proof of stake will make Ethereum less decentralized. We just need more time for better staking platforms to come up. Danny Badia asks, how do we position ourselves to get ahead in the next bull market? The best way is to get a job in the crypto space. By building in the bear market, you will be at the forefront of innovation and narratives, and you get to build those relationships and resources to benefit in the next bull run. If you're only looking to invest, I would only hold Bitcoin and Ethereum for the long term and avoid trading other risky altcoins for the short term. It's all about conserving your capital right now. Winners of the next cycle will be its own new narratives, so pay attention to what brand new ideas are getting funded and what new problems are people trying to solve. The ideas don't have to be practical. DeFi and NFTs were complete jokes in 2018. Don't be anchored to the old narratives that everyone already knows. People will need new stories to push in the next bull run. A few narratives I'm following are modular blockchains, ZK rollups, general purpose interoperability protocols, decentralized social media, and decentralized web. Saeed asks, when do you think altcoins go up? Altcoins are highly correlated with Bitcoin, so once Bitcoin starts its new uptrend, altcoins will all go up. That may be this year, or it may be the next Bitcoin halving in 2024. We have to play it by year and watch Bitcoin's price movements. There are also shorter periods where some altcoin narratives pop off in the current market. I use Bitcoin dominance to monitor this. Bitcoin dominance recently started a new uptrend, which means altcoins are suffering. So I'm waiting for the next 2 to 6 months until Bitcoin dominance starts going down again, and that would be a bullish signal for altcoins. Dan Musa asks, is crypto your only income? Yes, crypto is my only income. It's been this way for about 2 years now. I don't rely on trading though. I have a few streams of income in crypto. There's investing, affiliate marketing, and DeFi farming. I'm also looking to start doing sponsorships and my own products soon. Kuhn asks, do you think 18K was the bottom? My gut tells me yes. Everywhere I look on YouTube and Twitter, all the permabull personalities are turning bearish, although this is just pure guessing. More practical way to look at it is the Bitcoin bottom is somewhere between 12K to 18K. Even if 18K breaks and we fall further, there's maybe another 20 to 30% drop. Everyone is also waiting for this sharp drop to load up, which means if it happens, it will be hard to catch. For these reasons, I don't want to risk being sidelined. Instead, I'm happy holding Bitcoin and Ethereum, and I don't care if it drops some more. However, if you are holding other risky altcoins, you need to pay attention to Bitcoin. If Bitcoin does break below 18K, altcoins will have another major crash. That's why I'm only accumulating Bitcoin and Ethereum right now. These two have at most another 20 to 30% drop, and I'm totally okay with that. Ryan Montcalm asks, what can you see Ether reach by 2024? I can see ETH reaching 10K by late 2024. The next Bitcoin halving is in March 2024, and by then, other parts of Ethereum 2.0 would have been rolled out, such as sharding and ZK rollup layer 2s. ETH market cap has been lagging Bitcoin market cap by one cycle. Bitcoin peaked at around 400 billion market cap in 2017, which was the peak of ETH market cap in 2021. This would lead to around 10K per ETH in the next bull run, with a $1.2 trillion market cap. Obviously, past data does not predict future performance. But the way I look at it, if you don't even think Ethereum can hit another 5 to 6x by the next bull run, what are you even doing here? Crypto in general is still super risky, so we have to bet on the bigger potential. Personally, I'm holding ETH till 10K plus or zero. There is no middle because it's not worth the risk. Sam Goldfarb asks, can you share a portfolio of small alts that has great potential? No, I can't because I don't hold any small alts right now. There are some major narratives that I will be accumulating in this bear market, but so far nothing seems cheap enough yet. The main narratives I'm watching are modular blockchains, ZK rollups, general purpose cross-chain protocols that connect existing blockchains instead of having a closed ecosystem, decentralized social, and decentralized web. The infrastructure projects in these narratives will pop off in the next cycle. However, the existing projects are still overvalued and the new generation of projects haven't launched yet. Digits Capital asks, how did you get the name VirtualBacon? Basically, I used to be super into virtual reality. I used to do a bunch of live streams actually on Twitch in 2014, 2015 or so, specifically doing VR content like VR games, VR shooting games, VR, like just new products, trying it out. And it was really fun. I really liked it. And I wanted to find a channel name that represented virtual reality. Back then, a lot of the VR channels called themselves virtual something virtual. And I didn't want to just be virtual Dennis or virtual person or something. So I wanted to pick something that rolls off the tongue, and bacon came to mind. So I picked VirtualBacon, and then I stuck with it since. Over time, I stopped doing virtual reality content and actually got into streaming crypto and blockchain stuff back in the day on a platform called DLive. I don't know if you've heard of it. This was in 2019, early 2019, 2018-ish. And that was really fun. And I kept the name VirtualBacon then. And then over time, it transitioned more into this type of pure crypto content. And I kept the name VirtualBacon. Today, I still like this name a lot. It's not like a crypto bacon type of thing where it's just very overused. I think virtual is representative enough, and it's still quite catchy. So I like it a lot. Crypto Sam asks, with concerns of crypto bans, what would be the best regulation/security coins favored by the government? When it comes to regulation, I don't think crypto will ever be fully banned. The only coins on high risk are privacy coins. Unfortunately, it's rough for privacy startups. I don't know if and when they will ever come back. On the other hand, if you're concerned about securities laws, there are some safer coins that stand out. Bitcoin and Ethereum have passed the Howey test. They are ruled as not securities. This might be the reason why other layer 1s similar to Ethereum have gained so much traction. ISO 20022 coins are also officially recognized as utility tokens for global payments. On the list, there is XRP, Stellar XLM, Algorand, XDC, and IOTA. These coins are relatively safe from the SEC, especially if XRP can win their lawsuit. Another observation is that altcoins under $1 billion in market cap don't really get on the SEC's radar. However, this is also why I'm not so bullish on super experimental DeFi and real yield coins. If you distribute dividend to token holders, the coin is for sure a security. The projects basically have to stay anonymous and decentralized, and if they get over multiple $1 billion in market cap, the SEC will go after them. That's it for this week's Q&A with VirtualBacon. If you want to ask a question, make sure to go on my Twitter, TikTok, Instagram, and Discord in the show notes below. There will be a post and thread for you to submit your questions for next week's episode. If you like this content, please subscribe and share it with your friends. Thanks for tuning in again, and I'll see you guys next week.